Welcome to another edition of the Cattle Call here on the Rural Radio Network. I'm Susan Littlefield. Excitement, man, oh man. I think if there'd have been allowed for fireworks on Friday night, we might have actually seen them because of this cattle market. We're going to talk more about this and something I found interesting, a cattle trade that went late into the evening. We'll talk more about that. We'll talk about the technicals and the challenge that's happening within the trade today, along with some interesting things happening within the open interest and a nice numbers increasing on the rally. As always, Brad Kooima joins us with Kooima Kooima Varilek out of Sioux Center, Iowa. And let's talk about the fact that we knew the cattle on feed report would be coming out. We knew cash would take place after that. But who'd have thought that we would have seen that cash discussions happening with the Packers way after 6 o'clock at night?
I know, it's crazy. Unusual, although it's happened 2 weeks in a row. Good to see you, Susan. Thanks for having me on. Yep. So I was still talking to the guy that sells my cattle, who happens to be my brother, at about 6:30 on Friday night about should we take 185, which was 2 to 3 or maybe even instances 4 higher than some of the bids had been the week or two prior to that. Obviously, that was a nice sale. We did sell quite a few cattle that way, but to wait that long, I think part of the deal is I think some of these packers that found themselves short bought decided to gamble and hope, well, maybe the cattle on feed report will be bearish at 2 o'clock. Maybe that'll break the will a little bit of the feedlot. Maybe we'll be able to get cattle bought a little less than we thought. Well, the report was neutral, and I didn't see anything too exciting about it other than you can see that the general migration of cattle on feed are still moving to the north. And particularly away from Kansas, but to a degree away from Texas also. So when they didn't get any help on the report and the feeder said, you know what, I'm current enough here in my part of the world anyway, where I'm going to wait. And then the bids came around. There was a little 185 again today, by the way, and basically an immediate ship deal. I think cash is going to be better this week. I think we have a shot to be 1 to 2 higher again, both up here and in the south. It's Wednesday, so talk is cheap, but more than likely it'll be a late week trade again, I suppose.
So it sounds like we're going to go toe to toe and see in the end who wins out, and more than likely it'll be those cattle producers.
Well, let's hope so. Leverage is a cool thing when you have it, and it's such a fine line. I've said this so many times with you, but it's such a fine line between not enough and too many. Yeah, it feels to me like, especially in the north, I don't know if we're going to talk about the weights, the gorilla in the room or not, but the weights are not good, and the weights are big, largely influenced by Texas and Kansas. Not so much in Iowa. In fact, the average, we're very average. We look at that data hard every Tuesday morning when it comes out. But so it appears as though, maybe the more vertically integrated feeder, the packer is asking for more days and more weight. That is a way to create supply, obviously. But in the north here, where we still do the negotiation, we've still got a little leverage, obviously.
So since we're talking about this gorilla, I'll grab the bunch of bananas and how big can these cattle get in the south before it becomes too big for those packers?
Well, I don't know. Well, right now, I don't think that's a problem because they're so starved for supply. Right. But steers in Kansas, carcasses averaging almost 1,000 pounds. Wow. I mean, this is crazy. Some of it's genetics, I would suppose. We've talked for about how many now? 2 years, 3 years in earnest about this dairy cross, the business getting started so big. I tell you what, those cattle are going to get a lot bigger than this Mexican crossbred, the 1,260 pound steer that they used to feed. So some of it's that, but at the end of the day, it's still meat, and it's still meat that has to get consumed and at a price. So I don't want to paintbrush that this isn't a big deal. Clearly it's important, and it'd be even more important if we lose that current status like we have now in the north, if we start backing up. But I'm kind of encouraged, more than kind of. I'm really encouraged by the strength in the cash as we come out of this calf crop and into the yearling run. There's some high-priced yearlings out there, and it'd be nice if we can get those marketed on time so we can stay current going through that period as well.
What do you see for technical challenges within this trade?
Well, we're $12 up in a very short fashion in the December cattle. And so, there there are certain momentum indicators. I personally like the stochastics the best for cattle anyway, but they're higher than the giraffe's dentist here. The stochastics are well above 90%, and anytime you get above 80, you start to that's your yellow blinking light to be careful. Now markets can stay overbought for a while, particularly hogs, or oversold. But it's not natural for the market to move that quickly in that short amount of time. So the market is a market of action and reaction, which means usually bull markets are somewhat forgiving. You get a rally, you get a correction, you get another rally, you get another correct. Okay, it's like a stairway, not like a skyscraper. So could we have a little bit of a correction here? Sure. The one thing that I would note that I think is important technically, being at the topic we're on, 183.50. Some of the guys that I talked to in the fund community, if you want to call them that, were telling me like, well, the funds probably aren't going to really start to get involved until 183.50. Well, I'm not going to kid you. When we were sitting there at 173 and 174, I'm like, seriously? We got to get all the way to 183.50 to get you bulled up. But look at yesterday's action. When we took out that 183.50 for real, open interest up over 7,000 contracts. So, I mean, these guys came after it. They've got a lot of dry powder. Okay. They got a lot of bullets because this open interest is not very big, even now here at all. That excites me. That encourages me. That doesn't mean you can't have a couple dollar correction just because we're so overbought. But the technical picture of this thing is getting a lot better, in my opinion. Now, there are hedgers out there. I'm one too. I mean, I'm more than a speculative trader. I do feed cattle and I do hedge, believe it or not, once in a while. I just want to highlight a little bit the summer cattle, most particularly June cattle. Okay. We were at 180 yesterday. Now think about basis. The last several years, the last couple in particular, and for instance, like last year, you remember the basis, guys, 8, 10 over, sometimes more than that, 12. So what I'm trying to say is a 180 June, if the basis is like last year, that could be like a 190 May cash cattle. You tell me. I mean, is that a terrible place, to start selling a few cattle? I guess I think not. I'm friendly. I like the market. I think we're going into tighter numbers as we get to the end of the fourth quarter. But there's always something that can go wrong, as we've been proven over and over and over.
You and I haven't talked about this in a couple of weeks, and that's heifer retention. I've talked to a few young cattlemen out there that are saying, hey, we're going to hold back all the heifers we get this fall to start rebuilding what we have. But then when you look at the markets and the discussions out there, they say that there isn't. And of course, how do we know without a July report? But what are you hearing out there? And is the potential there to start seeing a pickup?
Well, it's a great question, and it is the question in terms of what we should be looking at analytically long term in the marketplace. We will get a little bit of a glimpse on the next cattle on feed report, because the quarterly reports, so the October one. Remember last year's quarterly October report was a real nightmare. That great big placement number. Remember it? I'll show you my scar. Okay, that one will give you a breakdown of steers and heifers that are getting placed, so that we should be able to extrapolate a little out of that one. The December one will help us with that too. Unfortunately, like you said, we did not get the semi-annual inventory report at the end of July, so we'll have to wait till the end of January. But to try to answer your question, and I asked this question to a lot of cattle people, the ones that I think that would have an educated response anyway, and it's very regional. There still is the main driver of, when I ask those questions, a lot of guys, they say, Brad, it's economics. I can't afford not to sell these heifers for what they're bringing. My banker tells me I got to retire some debt. I'm 77 years old. I'm not, but I mean, that's what people are saying. This is my way out. I'm not going to start a bunch of first calf heifers. And in fact, I'm selling cows, but cow slaughter year to date is down a lot from last year and the year before. So either you got to, if you're going to be a cowboy, you got to have cows. And so to me, there's that area across the north that I'm most familiar with, the Dakotas, the Montana, Wyoming, Colorado, that area. I think there's going to be heifer retention. I think it's already started. Now you go to, because they've had enough grass and enough rain for the most part. Now, if you go like the Southeast, the Virginia, Kentucky, that sort of thing, where there's a lot of cattle down there, they have not had great weather. And I think they probably aren't. So I guess that's okay. Let's start this rebuild phase slowly. It'll keep these numbers a little tighter, a little longer than what we thought they might have otherwise. But yeah, all eyes on the October report, and then certainly that January report ought to really be interesting.
All right. Well, I always appreciate the time that you take to talk with us. What's the best way for folks to get a hold of you guys?
Of course, I enjoy it, Michelle. 712-722-0023 is the phone number. But if you look us up at kkvtrading.com, you can find out all about us.
All right, that has been another edition of the Cattle Call. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call right here on the Rural Radio Network.